Welcome back, everyone, to Vox Markets. My name is Paul Hill, and by popular demand, I'm delighted again to be able to speak to CEO Harry Adams of Argentex, a tech-enabled foreign exchange international payments service provider for corporates, institutions, and high net worth individuals. So, welcome, Harry.
Welcome. Hi, Paul. How are you doing? That's
very good.
Particularly
well, big congrats on yesterday's inline first half trading update. So maybe we can start there. What was behind the sort of the 28% like-for-like increase in revenues to £25 million?
Yeah, so I think I've messaged to you and investors fairly consistently over the last couple of years that we overhauled our strategy 2 years ago, actually pretty much to the day, around 3 pillars, which is people, places, products and technology. So we worked really hard. The team worked exceptionally hard over the last sort of 9, 12, 18 months, getting us to a position where the business can now operate in any market backdrop. And of course, it's not been a particularly easy half in terms of corporate Britain, which is really what we do. We're here to help corporate Britain navigate the foreign exchange conundrum. So I think really the results that we posted today, it was exceptional growth, but we shouldn't forget that's off the back of a brilliant year last year, but also in some fairly dull market conditions.
Why don't you just talk through the sort of the Q1, Q2 split? I appreciate, it's very difficult to sort of talk in only 3-month slots, given the sort of the business, etc. But just from giving the trading update, and I know I had quite a few investors asking me, just in terms of the colour, how that sort of momentum went from Q1 to Q2.
Yeah, I think, in a perfect world, investors will just want straight line growth quarter and quarter, make their life easy. But we are a trading business. If our clients aren't trading or they're sitting on their hands waiting to see where the market's going or the economic backdrop and whether that's improving or not, then of course we can't force them to trade. So we're here to remove the risk for our clients. So as soon as they have a requirement, then we will we'll help them. But I don't think we're alone. If I'm honest, checking the results from our competitors, but also some other trading businesses. May was a poor month in terms of there was one less day than we would usually have, but also a lot of holidays. But we knew it was going to be a tough half, which is why in our budget we certainly thought there would be a higher sort of weighting to H2 than H1. And historically we've sort of been around about that 40 to 45% mark for H1. On a calendar basis, we're 42%. It's been as low as 38%. If you take last year as an example. So we're broadly in line. We're comfortable. We're happy, and looking forward to H2.
Good. And the sort of exit momentum from sort of the end of H1 into H2, because I know last year we had the crisis with Liz Truss, so that sort of like was a bit of an exceptional, to say the least. But are we sort of like expecting September time to sort of like see things really kicking? Because you've got your international and your technology really sort of like, starting to do some heavy lifting, I guess, towards the back end of the year.
Yeah, exactly. That's why we always thought we'd have a slightly heavier weighting than we normally do to H2, due to a lot of the investment that'll be coming through that we earmarked for around about sort of June, July time to kick off. And if you read the RNS, we put out a line regarding the alternative transaction banking as an example, where we started that from scratch, and our first payment or trade, whatever you want to call it, was in end of March actually. So that's been really exciting. We knew it is a product that the clients wanted. They are adopting it, and we haven't done the numbers yet in terms of the H1 hasn't been audited, and we're probably put a lot more meat on the bone around about September time. But I'm expecting to sort of report that the quality of earnings, the average revenue per client would have increased.
Okay. And is there been any sort of like early signs of sort of activity levels increasing at all at clients, given that sterling has appreciated significantly against the dollar of late, or the dollar's weakened, should we say, and also against the euro?
Yeah, so you mentioned earlier on sort of the Trussonomics period, and really, what that does is it brings some of the revenue that you can expect H1 or specifically sort of Q1, I guess, into last year, because if clients see an opportunity to trade when the rates suit them, and of course they're going to do it, then they're not just going to sit on their hands and wait to Q1, Q2, because that's when they would usually do it. I think also clients are starting to grapple with the fact that interest rates in the UK are going to be higher than they initially expected. And they're now looking to see how that is going to impact that business. So, the majority of our clients are corporates across the UK and a few over in Europe, a majority of corporates in the UK. And they've got a decision now. Do they just sit back and wait and see before they sort of restock or start forward buying their stock? Or do they just go in now because sterling is sort of at a 3-4 month high against euro and an X month high against the dollar? There's a decision to be made there. I think you're going to see less emphasis on clients moving due to the rates, but so due to the exchange rates, and more to do with just having the certainty on the interest rates.
Okay, good. And just more broadly, looking into sort of 2024, 2025, and the sort of the 3-year transition you talked about with people, sort of technology and products, etc. How's that transition progressing? Because you're 2 years into it now, aren't you? I think.
Yeah, good. Look, it's been fun. We're a fast-paced growth business, so we have 170 staff now. We've pretty much doubled the size of the business in the last 2.5 years. So it has been exciting, but this really is the tip of the iceberg. I've messaged to you and again, investors, that this market is absolutely enormous. It's huge. It's ripe for disruption. And if you get a couple of things right, which I'm not saying we have had them right or bang on in the last sort of 3 years or so, but we're starting to sort of transition to getting a lot of stuff right, then there is no reason why you can't flourish in this market. Now, better than most that there is some other sort of external factors sort of out of our control. But the preamble that we had to this call, we discussed about how maybe in the next sort of 12 to 18 months, the economic environment will start to improve, and of course, we'll continue to flourish through that.
Good. In terms of the sort of the broader kind of like competitive landscape with the traditional banks, have you seen any sort of like changes in that respect at all, or is the gap still getting still as wide as ever?
I think it's less the banks competing, and what you're starting to see are those challenger banks, so the likes of Revolut and the Wises that are starting to maybe move up the food chain a little bit. But there's a huge gulf between where we're positioned and where they're positioned. We are a sophisticated hedging business. We operates payments across the UK, Europe, and Australia. We have an investment license. We're able to offer clients all sorts of structures should they wish. So they don't really sort of compete, with Argentex, and that's sort of why we've always tried to position ourselves at the upper echelon of that market. But what it does allow us to do, though, of course, we've seen a few other competitors in our space, but also, Wise being another, who are making great revenue towards the smaller end of the market on the SME side. So it doesn't take much for us just to start bringing our attention a little bit lower once we create those efficiencies through the tech investment, which is what we're delivering on right now.
Okay, good. And I noticed also from yesterday's announcement, there was a big change up at the top at the non-exec chairman. Can you just talk through what's happened there?
Yeah, absolutely. So Digby's been involved with the business in one way or the other for 10 years now, over 10 years. He's been great, probably our best salesperson that we've ever had at Argentex. But it gets a time where, it's with the new strategy that we're developing. I'd quite like someone that is able to operate at sort of the more digital level, being kind to Digby. Nigel comes in with a huge amount of experience in digitalizing the lottery, which I know you know and love. I can't wait for him to get in here and start helping me with that journey.
Fantastic. All right, brilliant. Well, just finishing off then, in terms of sort of news flow, I guess it's relatively quiet now until the interims in September. Is that right? Or obviously you may have something up your sleeve.
Well, my Dutch office tell me the whole of Europe goes away
Yeah.
much today for 6 weeks. So we're sort of not expecting a huge amount to change between now and September yet. But you're absolutely right. We'll be out on the road, I think, sort of second week of September. So no doubt we'll catch up then.
Brilliant. Okay. Well, thanks again for your time, Harry, and look forward in speaking in September.
Thanks, Paul. Cheers.